It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Good morning guys. We are approaching end of the month and it's busy as we discussed over the last few days. So Bank of Japan done. Now we are waiting FOMC tomorrow, last day of July. So it's gonna be very interesting as everyone is waiting for FOMC and their verdict. The expectations were lifted a bit, right? At some point, the market was trying to pressure FOMC with 50 basis point cut, but looks like we are going to get 25, and then the statement is gonna be very important. So that's from the dollar perspective. There is also pound. We are going to discuss pound, which is crashing. Looks like current market's takeaway is no Brexit deal. No deal Brexit, sorry. Anyway, about the Bank of Japan, we are going to discuss with Michał. We are going to connect with him within the next 10-15 minutes. And we are about to start with the cable, but before all those informations, we have to have our risk warning in place. So let's start here, guys. Please bear in mind, trading effects on margin, trading crypto on margin carry high level of risk, may not be suitable for investors. You can sustain a loss of some or all initial investments, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Okay. That's what we have here. Let's start with the cable, and pound is crashing. Might be even better to check what is going on from the weekly chart perspective. A little bit of the cleaning is needed. So overall, we are falling right from the Sunday open, right? And we are testing the levels close to 121, and here, based on the weekly chart, that's what we have based on the price action from the late September of 2016, then again beginning of 2017, and again April 2017. I'm talking about this bottom around here, and looks like we are approaching fast. Now if we are going to add that CFTC just reported almost a record high of the cable shorts, of the pound shorts, so I'm not gonna be surprised that we are going to hit that lows, right? So for now I'm going to remove it. So for now, you know what, I'm going to remove all of this because we have to have clear view. For now, the first important level or zone from weekly chart perspective is a week in the mid-March 2017, and we are talking about 2165, which has been broken right now. And we are talking about the low from that week, and in that case it's 21.8. What about the low here? 21, let's make it that way, 21.333. As we can try to finish the business, I took the low from the 1 week before that one. Okay, so that's where we are right now. When we are talking about the current market price on the cable, we are talking about those 2 weeks over here, beginning and mid-March 2017. The next one is the low from the week from the very beginning of 2017, and we are talking about 2052. The rest, all the liquidity pools below. So looks like market may like 120 as a target, and then all about this. If you remember, pound flash crash we had over one of the Asian session, well below 120. Now let's discuss for a second the higher time frame perspective here, taking into the consideration or trying to predict what might be the next pound target. Not what market is talking, but what we can try to, using the easiest tools, what we can try to predict. And guys, looks like 116.50, 117 might be the target. So to be on a safe side, let's call it in between 116.50, 118. That should be okay based on this weekly chart. So we know the downside target, so it would be good to try to talk about where to try to join the party, because we sped it up to the downside right from the start of the week. I think from my perspective, I think that the levels based on the low we created a week ago and 2 weeks ago, in that case we are talking about 2380. Now the good question is, can we rise that high? Because that's the also previous possible demand zone here, right? That's crucial here. Now let's switch to the daily chart. It should be much more interesting. So from the weekly perspective, we know where we are and we know what might happen. So let's have a look from the daily chart perspective where we are. In that case, today's open and mid of the yesterday range as a possible selling level. So let's put 22.14. Because we have to make it visible, and you don't want to chase you don't want to chase some levels, right? I mean, what I mean by that you don't want to chase the market price. You right now on the cable, you have to have some levels from the higher time frame to try to avoid the situation that you are chasing to the downside and you are constantly being stopped out with tight stops, right? So that's what I'm talking about. And 50% of yesterday range is gonna be around $22.94. So we have two possible levels, 22.15 and 22.90.23, and then 23.80 to the upside from the pound perspective. So let's have a look over the course of those moves to the downside, right? Let's have a look what we have in case we are going to start to move a little bit higher, right? So I'm gonna to take into the consideration the move after we broke through the latest consolidations, right? So what I'm gonna to do, I'm going to make some measure. That was the rally, right? So if that's the bottom, we might see the rally towards above 22.15 or even higher, and this mid of the yesterday range might be the case here of this bounce. And look, if that's the bottom here, ideally 22.90. So quite big bounce is possible. So that's why I decided to spend first few minutes of our meeting today to try to discuss the possible bounces on the pound, right? Because of the two factors I'm taking into consideration, right? The market is very short pound. That's the first important thing. And the second important thing, where we are from some levels perspective, right? So you don't want to chase bounces of 15 pips on the cable, right? In my opinion, it's a better, especially that we have end of demand, especially that we have FOMC tomorrow. It's better to be patient and wait for a little bit bigger bounce. And looks like based on what we made the measure here, looks like we cannot rule it out 22.90.23 retest of these levels. 22.80 was some psychological level as well, and you shouldn't be surprised seeing this lower shadow right now because of where we are. I'm not saying we are not gonna break through and retest 20.50 within the next 1 hour. What I'm trying to check is where I can try to join the parity to the downside, right? So based on all of these informations, all right, let's make another measure, and looks like the move to the downside might be done, right? The main move yesterday was here, and looks like we might be done. Of course, we had some kind of the very tiny consolidation and breakdown over the course of the Tokyo, but yeah, let's wait and let's see. So from the intraday perspective, there is I can't see, so the 50% of that range, 22.80, 23. That's where I'm going to wait on the cable. Looks like also the euro pound broke through some important levels, all right? From the weekly chart perspective, we took out the high over here, at least for now, still early right? And looks like we might see finish the market. The bulls want to finish the business, right? So in that case, we are talking about the levels closer to 92.70, 93. But with this type of the speed and with the continuation of the pound weakness, if the market is going to decide so for now it's something around 92.70, but if market is about to decide that this was the consolidation and we want to break to the upside, then guys, parity might be in play, right? So overall on the pound, the current market takeaway, and to be honest with you, we were discussing this that yeah, there was no market move after the Boris Johnson first statements, but looks like it was the delay move, and especially yesterday, especially the overall picture is black, and no deal Brexit on the horizon, and it's some kind of the confirmation what's the Boris Johnson hard stance after yesterday. It is after yesterday visit in Scotland, right? So in that case of euro pound, I think that any kind of the pullback, and we might see this type of the pullback towards 91 on euro pound could be the case, but euro pound has to be taken into the consideration along with euro dollar chart, right? And euro dollar chart we are going to discuss after our conversation with Michał about the Bank of Japan and yen crosses. So hopefully we discussed pound in details, so it's time to switch to the yen, to the Bank of Japan rate decision. No spoiler. I'm going to give it to Michał. So guys, please give me a few seconds. Stay with me. I'm going to connect with Michał. Okay. Mr. Michał, good morning. Can you hear me?
Good morning, loud and clear.
How are you doing?
Fine. How was the weather?
How was your weekend?
Our weekend, busy as always. But how was the weather at your place? I heard that wasn't good yesterday. You have, but I see that you still have the internet connection and running well. So
wasn't that bad. Wasn't that bad. All right, because we are running out of the time. Michał, all over to you. What about the Bank of Japan? What about the Mr. Kuroda?
Okay, about the Bank of Japan, as everybody saw the calendar. They leave the interest rates untouched on the minus 10 basis points. And right now, as you mentioned before, also everybody are awaiting the Fed rate cut. And before the statement, before the decision, Kuroda has repeatedly stated also that they're closely monitoring the situation and they will take actions as if it's necessary. And also they stated that in the monetary policy statement. They keep the statement untouched, unchanged, and also they mentioned that the interest rates will stay at this low through April of 2020. So they are expecting that right now they won't change it. Some of the Bank of Japan members believe that the high domestic demand is compensating the weak export. So I think they are right now very confident about the situation of the Japan economy. As you
or they playing the game. Every central banker is playing the game. Yeah, everything is all right. No worries. In case it's needed, we are going to print more money.
Yeah, that's why they mentioned that, like the ECB, right? They didn't do nothing. They're waiting right now for the Fed. But I think also that the Bank of Japan, even though they will keep their monetary policy, when every other main central bank will start to lower the rates, I think they will have to also do that, because after that the yen could become too strong, and it could affect export much more than it is right now. They also lowered the estimates, right, for the GDP for this year. For the next year, 2020, they left untouched, and for the 2021, the forecast for the GDP is lowered by from 1.2% to 1.1%. But the inflation is slowly reaching the 2%. So I think that right now they are feeling pretty confident, and I think as is the matter with ECB, they will change the statement, the outlook after the Fed rate cut, right? I think it's the most important right now, how the markets will react, and how it will affect.
You've mentioned about the confidence twice. I've been listening carefully. You mentioned about the confidence twice. I think it's if I can call it that way, it's a outside confidence. Inside they are shaking and screaming that because that's what we discussed as well after the ECB, that they are running out of the tools. Of course, they're saying that they've got plenty of tools, but all those central bankers are running out of the tools. And to be honest with you, trying to go ahead a bit and towards about the tomorrow's FOMC, and to be honest with you, the whole cycle to the upside from the FOMC side was so smart, because now they can say that they have at least one tool trying to lower the rates. Other central banks like ECB, Swiss Bank, Bank of Japan, all of them already in the negative territory. So so again, the US guys was the smartest in town. Anyway, let's get back to the Bank of Japan and the dollar yen chart for a second. Mm-hmm. Because looks like market is not that confident as the Bank of Japan members. So there was an attempt to break yesterday high, and we failed around 108.90. This 108.90, taking into the consideration the monthly chart, that's what we discussed, is the bottom of the February, that's where we started the rally towards the high we reached in April. Then we broke through, and in May we closed below. And previous week I've been pointing out that this February low is a key, and looks like the first attempt and been rejected. So it's a nice failure. Something nice from the intraday perspective. Anyway, we are fighting right now around the weekly open in that case. So taking into the consideration the whole range from yesterday, I think that might be the key, because yesterday first we saw the breakdown to the downside during the Tokyo session, then the New York was totally reversed. There was an attempt to break higher, fail, and probably that's how I see the thing right now. We might retest this yesterday low again, especially that we are creating something like drop based, and probably we are going to continue. We will see what's going to happen after the London Open. We are in the middle of the road right now, so watching carefully. Michał, anything would you like to add overall?
Yeah, I just wanted to add that after after the statement, after the rate decision, they made this a decline, right? So I think in the short term, at least for today, and I think you will see yen getting a little bit stronger. But yeah, as you mentioned, but yeah, what else can I say? I think we will have a better view for the yen after the Fed rate cut. But my outlook is that we will have a today or even tomorrow a stronger yen, right? So
Okay.
yeah.
I can see similar, especially that we are approaching end of the month, so the big guys who are drawing it's a joke, who are drawing the charts for us, they are going to try to take over here, and they are going to draw whatever they need, whatever they want. And the next thing is it's the end of the month and the FOMC. So tomorrow, last 2 hours, that might be the key. Are you going to join us tomorrow for a party?
Yeah.
FOMC party, right?
Naturally. Yes, I want to just add from the statement. They also mentioned, I don't know how is it important, but I think it's quite a lot. That they were paying close attention to the financial system, but not excessively bullish expectations for the assets markets, and that Japanese banks have enough capital base. So I think they are like preparing, and but yeah, that
for
may
the
be,
worst case scenario.
yes, right, like the ECB, right? They're taking the big cannons, but they
verbal intervention.
That's right. But they might after they will try to do that, they might seem not enough for the because we were talking about previously, right? That it's not in the terms of the monetary policy, more like the trade tensions right now, and with that, central banks cannot do a lot.
Very good that you've mentioned about these trade tensions, because there is one more very important thing. Not only Bank of Japan, not only FOMC, not only end of the month, but right at the very beginning of August, 1st and 2nd of August, US and Japanese representatives, they will start the trade talks as well. So in that case, Bank of Japan may want to try to keep yen a little bit neutral right now, trying to avoid the situation. But because overall lately we've seen this invisible Bank of Japan hands trying to weaken the yen, but right now I think, especially ahead of this trade talks, they cannot do too much not to be mentioned as a FX manipulators by Mr. President Trump on Twitter.
Yes, that's right. And also what I mentioned at the beginning of our talk, that they think that the domestic demand is compensating the trade, but if the manufacturing data was also low, so I guess this domestic demand can't last that long as they are expecting to do. That they cut the forecast for the we can say short term, but in the long term they left almost untouched. So yeah, I think you're quite right at the moment.
Thank you very much, Michał. Thank you.
Thank you for having me. Have a great London session, as you could say, and yeah, till next time.
See you around, most probably tomorrow. Have a good one, and see you around. Take care, Michał. Thank you. Goodbye.
Bye.
guys, so let's get back to this dollar yen chart. That's the hourly chart. So let's switch for a second to the daily, and it's yeah, it's visible, and what we discuss and why we are trying to hold this level based on what we talked. Here is also the previous demand based on the daily mid and late January, plus this bottom of the February. All of this, and right now the bears are trying to take over. So it should be very interesting day from intraday perspective. I'm going to watch very carefully retest of this yesterday high, today high, and maybe test of 109 as a selling opportunity from the intraday perspective, as well as, to be honest with you, we might see attempt to break lower below the yesterday low ahead of the FOMC. But you know what, I'm going to watch that one very carefully, and cannot rule it out that I will try to maybe grab a little bit of the long, a little bit below yesterday low, towards let's say, what was the break here? Towards 108.50, especially that we don't have on the yen, we don't have any big option expiration today, so yeah, I think it's gonna be like stop count ahead of the FOMC. So that's what we did during the Tokyo, that's what we are doing right now, right ahead of the London Open, where we are taking this stops based on yesterday New York session. So yeah, let's try to hunt more stops and reverse. That's what I'm gonna to look for on the dollar yen and euro dollar. And here is a very important thing, because right now euro dollar is supported by what is going on euro pound, right? So we were trying to hold, I mean, the bulls were able to hold Friday low, and to be honest with you, we just created something called twizzer bottom. It's not the great twizzer bottom because it's above post ECB low, but anyway, I see two possibilities here on the euro dollar from the bulls perspective. Now first, let's have a look what we have from the monthly chart perspective and where we are, right? The current move of this month, right, to the downside, we broke through the previous month low, and we are testing the latest weakness we've seen, and we were discussing many times already, right? So that's what we discussed, the range created in September 2016, right? And then we saw the move to the downside only. So we are trying to hold around these levels based on the monthly chart. Now from the bulls perspective, of course we have of course we have FOMC tomorrow, but we have this monthly end of the month as well, and bears are going to try to push lower. Would be great to see the monthly close below post ECB low, right? And that's what bulls are trying to defend right now. And from the bulls perspective, I know it doesn't look good, the chart, but from the bulls perspective, it might be a little bit easier. They just need to close around previous month open. So we are talking about 1150, 1165, and creating small lower shadow, defending this latest weakness. So from that perspective, I think if you are a bear, then you are taking your seat, fastening the belts and waiting for the close below post ECB low, right? You want to see the monthly close below, right? Bulls are fighting, and here I'm gonna be a little bit more aggressive this morning and over the course of the day today, because of this tweezer bottom, right? There are two possibilities. Either I'm going to be stopped out below yesterday and Friday low, and we are about to retest the post ECB low. That's where I'm going to have second attempt. My first attempt is going to be based on is going to be based on the intraday chart, all right? And that's what I'm gonna to look for here, right? I'm about to look to try to trade the long side of the euro dollar in between 11.30 and the weekly open 11.20. So somewhere here I'm looking to try to jump in and trying to trade the long side. My stop is going to be below yesterday and Friday low. If I'm going to be stop out, I'm going to look for a price to move lower towards post ECB low, and I'm going to watch carefully the price action over there and trying to join one more time ahead of the Fed. My targets, the first target is of course post ECB high levels towards 1180, right? But if we are going to be here, I'm going to trade the half only, right? Because if at some point we are going to have all the puzzles in place and tomorrow, right after the Fed is important, tomorrow really is important because it's also end of the month, we will see dollar weakness above 12.15 on euro dollar. That might be significant development, right? On the other hand, close below post ECB low will open 110.19 and probably as low as 108.30 ahead of retest of this consolidation we've seen for quite some time, almost 2.5 years, right, on euro dollar. So that's how I see the things on the majors. Before we met today, there was the French GDP a little bit weaker. We are awaiting for over the course of the day. We are going to get from different German lands. We are going to get the CPI and full report around 2 p.m. So around the New York Open. Then during the New York session, we are going to get the core price index, CP core price index from US, personal spending and personal income, as well as consumer confidence and pending home sales. When we are talking about the options market, it's worth to mention 11.45 on euro dollar, 1.3 billion. So that might works well as a magnet, right? That's where we were rejected yesterday and today during the Tokyo session. So this might work well as a magnet. The next significant options 12.50, also 1.1 billion. For tomorrow, 112, 1.7 billion. So looks nice from the euro dollar perspective, right? Guys, we, because of the tons of different events tomorrow, we are going to stay in touch almost whole day tomorrow. So you are more than welcome to join me as usual, 8 a.m. CET, 7 a.m. London or 2 a.m. Eastern for pre-London Open live market coverage only here, Global Light Forex YouTube channel. Then again, we are going to cover tomorrow Canadian GDP and of course the party of the month tomorrow. Quarter to 8 p.m. CT, quarter to 7 p.m. London, and quarter to 2 p.m. Eastern. FOMC day, and you are more than welcome to join me here, Light Forex Global YouTube channel. That's it from me today. Have a great day, have a great rest of the London session, and see you around. Goodbye, guys.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, light Forex social trading. Spend your time doing what really matters to you.